Candle range theory, or CRT, is this really the holy grail when it comes to trading? I'm going to answer every single question in this video today and teach you guys everything you need to know. I will cover what is CRT, how can we use it to be profitable, what makes it high probability, and I will be uncovering all the secrets you need to know about CRT. Now, if you clicked on this video looking for some holy grail with a 100% win rate that never fails, click off the video right now, because I can assure you this strategy isn't some sort of magic tool which will instantly make you profitable. However, for those of you who are looking to become better traders and reach profitability, absolutely watch this video as it will certainly help you. Now, to start off very simply with our candle range theory, we all know a candle is a range. Now, a big candle like this, say on the daily time frame, could also be price action like this on the 15-minute. However, this is all condensed into one candle. Now, you guys should be familiar with open, low, close, high. So what do I mean by this? This is the open of the candle. This is the low of the candle, where we get this wick low right here. This is the close of the candle, and this is the high of the candle. Now, it is the same thing on a lower time frame, such as the 15-minute, for example. This is the open of our trading range. This is the low of our trading range. This is the high of our trading range, and this is the close of our trading range. The points we want to focus on is the low of the candle and the high of the candle. This is where the most liquidity is, especially on a daily candle, as this is a significant area of liquidity as previous day high and previous day low. CRT is nothing new. It is simply a concept rebranded. If you guys go on my channel and you look about a year ago, I've made a video about daily bias, where I use daily candles as such, mark out the high and the low of each candle, and use these points of liquidity to determine the direction and bias of the next candle, which is essentially me using the range of the candle to determine bias. All I taught was as follows. I would mark out the high and low of each candle, wait for the next candle to play out as such, and as you can see, this market has taken out the low. However, we've had body closure back into our range. From here, I would assume market is going to take out the next high of the candle as we've swept the low and had body closure back into our range. From here, you can see we do take out the high. However, we do have body closure back into this range right here as follows. So from here, I would assume market is going to come and take out the low of this candle right here. So if I just play out the next candle, you see we do. From here, we do get another close outside of the range. And this is not 100%, however, it worked amazingly for bias. It would work about 90% of the time. As you guys can see, we do not close above or below the high. However, if we play the next candle, we close above the high. So from here, I would simply assume we're going to take out the high again, as we've had body closure above this high right here. And we do, if I say it again, we're going to take the high, which we don't. However, we do take the down, we take the low of the candle. So I'm going to assume market's going to take the low of this candle, which we do. And it just works as follows. Now, this is what people would call CRT, or candle range theory, which is what I was using for daily bias and which is what I taught. However, it's simply using candle anatomy. And all it simply entailed was me understanding CRT or candle anatomy, whatever you would like to call it, understanding that each candle has a range within it. If I was to drop to a lower time frame, each of these candles are lower time frame situations, scenarios of market rallying, playing out, consolidating, moving higher, whatever it may be, understanding there's liquidity at the low of the candle and at the high of the candle. Now we are going to talk about the power of three: accumulation, manipulation, and distribution. And how does this link back to the candle range theory? Let's start off with this candle right here. How do we have accumulation, manipulation, and distribution within this one candle? Now, price opens at this point right here. So let's imagine price is playing out here. Price opens right here. Now we get a distribution below the opening price, and we come down to the low of the wick, or the low of our range, which is right here, which then market may be aiming for a point of liquidity, such as this liquidity up here. So market may be rallying from here all the way to this point of liquidity before coming back and closing within our range. It is important for us to know on this one bullish candle right here, not only can we get accumulation, we can also get manipulation, and we can also get distribution to whatever liquidity may be resting here from other points in the market. Many traders would look past this candle range and not see what is really happening within this range, and not imagining how if you drop your time frame, you'd actually see accumulation, you'd see manipulation, and you'd see distribution. So if you are going to look for your next candle and the bias of your next candle, it could greatly affect it, such as if we've already had a manipulation, but you are unable to understand that because you do not understand candle range theory. However, sometimes accumulation, manipulation, and distribution, the power three, can happen on two candles, which it is a lot more clearer on. Now, we have the opening price here, we have market rally, and we form our range. We have the high of our range and the low of our range. Now, from here, the candle closes up here, and we have this bearish candle open right here. Now, price has probably had some accumulation. Then we've had our manipulation, not only above this previous day high or whatever it may be, this previous candle high right here, and we formed the new high of our range. Where market does come back, we rally down towards this point of liquidity, the candle range low, which we do take out. So not only have we had accumulation from this candle right here, we must have formed some sort of liquidity from maybe the candle close. Maybe if we drop the time frame, it would be a lot clearer to see the consolidation, so and so. And we do get a manipulation above this candle high right here, to then where market distributes as we get the liquidity necessary to move downwards, to which we take liquidity to the downside as well. Now, if you apply this to real market situations, and if there was a fair value gap here on order block, as so, market taps into our order block or fair value gap or any other PD array right here. However, this is just to instigate early buyers and sellers as inducement to form liquidity below this low right here, which then the second candle opens, we get that manipulation below this low, taking out any early buyers in our scenario, or it could also be early sellers if we were in a bearish situation. However, in our situation is early buyers, which we do take out before continuing the big move towards the upside, where we do take out the candle high. It could also be a case if there was a liquidity area right here, such as an old low, which market is looking to take out. If this first candle failed to displace below this low or take out this liquidity right here, not only do we have an induced area of liquidity as we have this candle low right here, we also have this candle come, take out not only this area of liquidity, but also this liquidity right here, which is manipulation, and we do get market gets the liquidity necessary to make the move towards the upside. Now, same thing on a 3 candle pattern. However, it is way easier as we can label each candle as accumulation, manipulation, and distribution very simply. We have market accumulate, form our range. We have manipulation where market comes, takes out this candle range high. We close back within our zone, so we know market will be pushing down, and we distribute to take out the low of the candle. Not only do we take out the high of the candle, we also take out the low. This just shows we can have the power 3 on a 1 candle formation, a 2 candle formation, and a 3 candle formation, each representing something different and each showing a different picture and story. Now, we cannot see the full image or picture until we drop to the lower time frames and really see what's happening on the market. However, each candle gives us a pretty good idea. Now, within some of these candles, such as right here, we could have more manipulations, such as this candle right here. We could manipulate, we could form some liquidity here, have a manipulation to this high right here, and come distribute lower to take out this low. Now, what is the highest probability candle range theory setups? To start off with time frame, daily candles have the highest probability due to the most significant area of liquidity, which is the previous day high and low. Now, whatever time frame you use will have a bearing on what candle and what time you're going to be trading. If you are going to be using 4-hour candles, I recommend you guys trade the 1 a.m. candle and the 5 a.m. candle, which is London kill zones. And if you do trade indices, then 9 a.m. would also be a great time for you to trade. It's also very good to get a bearing of the higher time frame. If I'm looking at a daily candle, it's good for me to check the weekly time frame and see what the weekly candle range is saying. Then I can move down to my daily candle, see what the daily range candle is saying, and also use that previous week high and previous week low as liquidity. In the same way I would use the daily candle, marking out the low, marking out the high, waiting for the manipulation and the distribution. Whatever time frame you are on, all the patterns and strategies work on it. So whatever patterns and strategies work on the 1 minute also work on the monthly. Time is fractal. However, looking at a higher time frame gives us a better bias and understanding of the market. A higher time frame is also a stronger time frame. And the fourth and final point is to use PD arrays as a confluence. As I've said, if we have candles playing out in an order block, you'd want to mark out the low of the candle and see if market sweeps below that low. I will show you guys what I mean on the real market, so let's get into it. Alright, I'm on USD on the 4-hour time frame. I'm going to be showing you how CRT works. Now remember guys, this is not a whole strategy, so you will have to implement other strategies such as order blocks, fair value gaps, liquidity sweeps, market structure shifts, whatever you use to enter, as candle range theory is simply a confluence which you can use to direct your bias in the market. So I'm going to show you guys what I mean. And as I said, we are on the 4-hour time frame, which means we are going to be using the 1 a.m. candles or the 4 a.m. candles, as these are London kill zone times. So here we have our 1 a.m. candle right here. I'm going to mark out the high and I'm going to mark out the low, which is our candles range. And if you guys see right here, we are playing within a fair value gap. Now, if I play out market, what you'll see next, if I play out the next candle, we do end up taking out the high of this candle right here, very so slightly. If I drop down to a lower time frame, just so you guys can see, we do end up running above this high. We end up manipulating all this liquidity right here. So we've had our accumulation, which is most of this consolidation up here, where we have certain trend lines where market is following, where market is building up liquidity, a lot of consolidation, a lot of equal highs, a lot of equal lows, where market comes, takes it out, and we get our distribution phase. So if I play out market more, I hop back onto the 4-hour, you'll see price does end up sweeping the next point of liquidity, which is the low. So now playing the chart a bit more, as we see chart play out a little bit more, here we do have another order block or a fair value gap, whatever you may see it as, with order block right here, with a fair value gap right here. So we're going to use the fair value gap for the video's sake, as fair value gaps, I guess, are easier for most people. So as you can see, market does tap into this fair value gap. We also do have a breaker block, which is what you could have used as well. Now, from this high, we know this is our 5 a.m. candle right here. If I mark out the high and if I mark out the low, if I play out the next candle, you can see we sweep the high and we instantly go to sweep the low. Now, remember when I spoke about how we have 3 types of accumulation, manipulation, and distribution? We have one where it all happens on 1 candle. We have it where it happens on 2 candles, and we have it happen when it happens on 3 candles. This is an instance where it happens on 2 candles. So if I drop my time frame to a 45-minute, for example, you guys can see we do get accumulation right here. We have manipulation above the highs, and then we end up distributing all the way back to the low. From here, market has also left an order block. So this is going to be our next example where, as you guys can see right now, market does tap in. Again, a 5 a.m. candle. Low, high. This is our candle range. Now, if I play out the next candle, we do sweep the low very clearly. And you can see market closes back within our zone. So what can I assume? I can just assume market is going to come for the high. So if we drop time frame, something like the 15-minute time frame, we can see our order block right here. So the last down move before the up move, this is our order block. And if you were to place an entry, simply taking a long position, placing a stop loss below this low, for example, and targeting a form of liquidity such. You could have targeted this high for 1-to-1, however it's too low for me. I would have targeted 1-to-2 as such. So if you end up playing out the trade, as you can see, market does form more liquidity up here in the form of equal highs before tapping into our zone and shooting up, taking our take profit. How does this look back on the 4-hour? As I said, it is simple. We have market tap into the order block, sweep the liquidity, and we sweep the candle range low, end up taking the candle range high in the end. So this is how you can use it to frame your bias, how to frame trades, how to use it as a confluence. It does work very well if you just stick to the steps I teach you guys, sticking to the time frames, sticking to the timings, the kill zones, such as the 5 a.m. candle, the 1 a.m. candle. If you're trading indices, you can use the 9 a.m. candle. For this example, it will be on the NASDAQ, just to show you an example on indices. So let's get into it. As you guys can see, firstly, we do have built up liquidity right here in the form of equal highs, which market has just taken out. So we can confirm we are moving to the downside along with a fair value gap right here, which we do have an order block sitting above it, which market has not triggered yet. So now, as you guys can see, this is the 6 a.m. candle. The next one will be the 10 a.m. candle. So within these is the 9 a.m. kill zone time, which I said for indices works well, and you will see why. So if I mark out the candle range high and the candle range low and play out the next candle, you guys can see we do very clearly take out the high and we do tap into the order block. So this is an induced area of supply, which market comes, taps into the supply area or the order block, whatever you'd like to call it. And if I play out the next candle, so you can see we do end up taking the low. As simple as that. If you still aren't a member of the VIP room, you are missing out. The price will be increasing very, very soon. Now you will never get it for this price ever again. As you guys can see, every single day we are sending out bangers to the group. All of our members are profiting. The signals room is extremely profitable. If you want to see a small amount of our results, join the Telegram group at Pass My Challenge, and you will see how many signals we are really sending out and how many wins we are sending out. However, it's not just a signals room. We are teaching traders how to take their trading to the next level, teaching them the strategy I use for my signals. If you are looking to take your trading to the next level, make sure you guys join the group, or at least message me for some more information on why you should join the group. I hope to see you guys in there, and thank you guys so much for watching. I'll see you guys next time.